Welcome back to Sip and Talk. Today, we're pouring ourselves a tall glass of current events, you could say. We're sipping on something pretty big, an update on Trump's tariffs.
Yeah, and what it all means for the global market. It's definitely a topic that's been making headlines.
Especially, with Trump as the current president in 2025.
Exactly.
Now, before we dive in, just a quick heads up. We aren't financial advisors or economic gurus over here.
Nope, definitely not.
This is really just our take on the latest information we've seen. It's meant for your general understanding, your curiosity.
Absolutely. So please remember, any financial info we mention here is just for reference, okay?
Think of us as, your friendly guides trying to unpack some pretty complex global dynamics.
Yeah, hopefully with a bit of humor, maybe some real-world examples thrown in.
Okay, so let's try and attack this. We just had this new round of tariff notifications, right? July 9th.
Mm-hmm.
And you'd think, naturally, that would make the market pretty nervous.
Right, you'd expect some jitters.
But here's where it gets really interesting, I think. U.S. stocks. Still hitting all-time highs.
It's quite the paradox, isn't it? I mean, NVIDIA even hit a $4 trillion market cap intraday. Made it the top U.S. company by value.
Wow. $4 trillion.
And Bitcoin. It soared past $112,000.
Mm.
That's a new record.
So what's going on here? What does this all mean? It really seems like investors aren't too concerned about these new tariffs. Not yet, anyway.
Well, yeah, that's one perspective. Perhaps they believe the real impact won't really kick in until after that August 1st deadline passes for some of them. A sort of wait and see.
Maybe.
But another fascinating detail is just the sheer volume of tariff revenue coming in. The U.S. has collected nearly $100 billion in tariffs just year to date.
$100 billion already?
Yep, and it's projected to reach maybe $300 billion by the end of the year.
That is just a huge leap. I remember looking back, like 2010 to 2017, it was maybe $3.5 billion a year.
Exactly. It really highlights how much the policy has shifted.
Yeah.
And, it wasn't even reversed during the Biden administration, which is interesting.
Right. And that kind of revenue, $300 billion, that could potentially fuel things like, future tax cuts down the line.
It absolutely could. But it raises that really important question. Who's actually footing the bill for these tariffs?
Yeah, who pays?
Well, surveys from places like Goldman Sachs and the Federal Reserve, they suggest American consumers are bearing about 50% of the cost.
Half. Wow, okay.
Yeah. And U.S. businesses absorb another 40%. Only about 10% seems to be passed on to the foreign exporters.
So when you buy something imported, there's a good chance half of that tariff cost is coming out of your pocket, basically.
Pretty much. Though you mentioned some Japanese car manufacturers, apparently they've absorbed like 30-40% of the cost in themselves in some cases.
Oh, interesting. So it can hit corporate profits sometimes.
It can. And, despite what many economists predicted that tariffs would automatically lead to big inflation, we haven't really seen significant inflation spikes in the U.S. Consumer Price Index because of tariffs.
Why is that, do you think?
Well, mostly because the U.S. economy is fairly self-contained, relatively speaking. Imports are only about 14% of GDP.
Okay, only 14%.
And most domestic spending, what you and I spend money on every day, it's on services, not necessarily imported goods.
Right, like haircuts or restaurants, things like that.
Exactly. So even if import prices tick up a bit, the overall impact on your wallet for, daily stuff is actually pretty minimal.
Gotcha. Okay, so that's the broad economic picture. But moving on from that, it seems clear Trump's tariff policy isn't just a blanket approach. He's really picking and choosing specific countries.
Oh, absolutely. It's very targeted. This latest round hit 7 countries. You've got places like the Philippines at 20% and Brunei at 25%.
Okay.
Now, their total exports to the U.S. are less than $20 billion combined. So the immediate economic hit to the U.S. itself isn't massive from those particular ones.
But then there's Brazil. They got hit with a 50% tariff. That's the highest rate so far, right?
50%. Yeah, that definitely triggered a significant shakeup in Brazil's financial market. Their currency, the real, dropped almost 3% against the dollar pretty quickly. Their stock market took a hit, too.
And Brazil fired back pretty hard, didn't they? It wasn't just about economics.
Not at all. Trump publicly criticized Brazil over, issues like attacks on free elections, free speech.
Right.
Even demanded they drop charges against their former president, Bolsonaro.
Right. And Brazil's President Lula basically said, nope, we won't be dictated to.
Pretty much. He said they'd retaliate under their own economic reciprocity laws, protect their sovereignty. A very strong response.
So why can Brazil afford to be so assertive here? What gives them that leverage?
Well, it's a few things. They have a huge domestic market, 200 million people, plus tons of natural resources. and their geography makes them relatively isolated.
And doesn't the U.S. actually have a trade surplus with Brazil?
It does, which limits the overall economic pain for Brazil from these specific tariffs. It hits certain companies, sure, but not the whole economy in the same way.
Plus, Brazil has its own history of high tariffs and tough import controls, right? So they're not maybe as reliant on smooth long-term trade with the U.S. as some other places might be.
Exactly. It really shows this isn't just about opening markets anymore. It seems like Trump is pushing for countries to align with his values, his political stances, too. It's geopolitical chess.
And it's not just Brazil. Other Asian countries are facing new tariffs, too.
Yeah, Indonesia, Thailand, Cambodia, rates above 30%. Laos and Myanmar at 40%. Malaysia's at 25%.
Wow. And even long-standing allies like Japan and South Korea got these 25% tariff notices, with that August 1st deadline looming.
The pressure is definitely being applied globally.
So connecting this to the bigger picture, Trump's also hinted at taraffs for the EU and India, especially if they stick with the BRICS or penalize U.S. tech companies.
That's the signaling, yeah.
Yeah.
He seems to view BRICS as an organization trying to harm the U.S. economically. And he's warned about maybe an additional 10% baseline tariff for countries that align too closely with it.
He calls these tariff letters an invitation, not a threat, right? Basically saying, hey, invest in the U.S., open your markets.
Right, but it absolutely puts leaders in other countries in a really tough spot.
Yeah. Agree and look like you're selling out, or don't agree and risk serious economic harm for your country. High stakes.
Definitely. Okay, shifting gears a bit, back to the market itself. We're seeing this incredibly strong buy-the-dip trend right now.
Seriously strong. Bank of America apparently said it's even stronger than during the tech bubble back in the 90s.
Which is saying something. And what's fascinating is how fast the NASDAQ recovered. It dipped 23%, but then roared back to new highs in just 52 days.
52 days. That's incredibly fast.
Considered one of the most efficient investment recoveries in history, actually.
Yeah.
So, if you were brave enough to buy back in April.
You're probably feeling pretty good right now.
Yeah. And this has really shaken up the tech giant rankings, hasn't it?
Oh, completely. NVIDIA's rise just changed the whole game. Leapfrogging Apple, leapfrogging Microsoft, becoming the top dog.
It's amazing. A chip maker, the sort of foundation for the AI boom, is now valued higher than these huge consumer tech and software companies.
Right.
Really shows the market's conviction in AI's future.
And Microsoft, which had just briefly passed Apple, is now kind of back to second fiddle, as they say.
Right behind NVIDIA. And yeah, most of the top 10 are tech, but you still see Saudi Aramco in there, Berkshire Hathaway holding strong.
And TSMC at number 10, getting close to that $1 trillion mark.
But not all the giants are shining, are they? Look at Tesla.
Yeah, Tesla's tumbled out of the top 10. They're 11th now, I think.
Sounds right. They're facing some real hurdles with the self-driving tech, clearly. And, well, Elon Musk's focus seems divided with forming the American Party and other political stuff.
That definitely raises a question for investors, right? Like, how much risk premium do you need when the CEO seems so distracted from the core business?
Exactly. I mean, even their most optimistic analysts reportedly suggested tying Musk's compensation to his work hours and maybe putting some oversight on his political activities.
And his response was supposedly just, shut up.
That's the report. Not exactly confidence-inspiring.
No kidding. Then there's Google, Alphabet. Their stock's down 8% this year, while the S&P is up 6% and Microsoft and Meta are up over 20%.
Yeah, they're lagging way behind. They're dealing with those big antitrust lawsuits, both in the U.S. and Europe, about their search and advertising businesses.
Plus, new AI tech like OpenAI is challenging their core search engine, right? People are starting to just ask AI questions directly.
Definitely a threat. And it's weird because Google has so many resources, Waymo for self-driving, their own AI chips, search, cloud.
All the pieces seem to be there.
Right. But their price-to-earnings ratio, their PE, is only around 17x. That's way lower than Microsoft, Amazon, Meta. They're all above 25x.
So the market's just skeptical right now about their ability to really capitalize on AI or fight off the competition.
It seems that way. Like they have all the ingredients, like you said. But the market's not convinced they can cook the winning meal just yet.
Okay, let's look at China for a minute. One major challenge. There seems to be this idea of overcapacity, especially in EVs and food delivery.
Yeah, leading to these intense price wars. They call it involution over there.
Involution. Explain that a bit.
It's basically hyper-competition, where everyone in an industry is just slashing prices, killing profits, stifling innovation, kind of a race to the bottom, a zero-sum game.
Ouch.
So regulators are trying to step in, rein in that excess capacity. Now, that might hurt short-term GDP and jobs, obviously.
Right.
But if they manage it well, it could actually help stabilize their stock market long-term and maybe even ease some global trade tensions if they're exporting less aggressively.
Interesting. And on the trade relations front, China just put some Taiwanese military equipment makers on an export control list.
Yeah, 8 of them, accusing them of collaborating with separatist forces. And the timing was right before Taiwan's big annual military drills.
Doesn't feel like a coincidence.
Probably not. But on the U.S.-China front, it's a bit more mixed. Trump has mentioned having a good relationship with Xi Jinping, talking on the phone often.
Okay.
And U.S. officials are apparently set to start larger trade talks in August. So despite all the tension, the lines of communication still seem to be open, at least for now.
And what about China's AI ambitions? Bloomberg reported something huge.
Oh, yeah. Plans for around 40 new data centers out in their western deserts. Huge project.
And the kicker is they're aiming to use 150,000 NVIDIA chips, the kind they supposedly can't legally buy right now without U.S. approval.
Exactly. They're choosing those remote spots, partly for cheap land, but also for access to massive wind and solar power. Fits their sustainability goals.
So it shows a real determined push for self-reliance in this key strategic tech, even if they have to get creative about sourcing the hardware.
Definitely. They're playing the long game there.
Okay, so bringing it all together, what does this all mean for you listening right now? We've seen Trump's tariff strategy is complex. It's pressure, but also some flexibility maybe.
Yeah, trying to reshape global trade, push certain values, all while the markets, strangely, seem kind of unfazed for the moment.
For now.
But these policies clearly have big implications. Global supply chains, specific industries like semiconductors, copper, and definitely countries like Taiwan that rely so much on trade. There's anxiety there.
And maybe a growing question about trust among global allies, too.
That too.
So the big question maybe for you to think about today is, as these global trade relationships keep shifting and evolving, how might these changes in economic power, in geopolitical strategy, how might they impact your daily life?
Yeah, from the stuff you buy to maybe just the overall stability of the world around you.
It's definitely something to mull over.
A great thought to leave everyone with. We really hope this Sip&Talk gave you some new insights today.
And hey, if you enjoyed sipping and talking with us, please subscribe to Sip and Talk wherever you get your podcasts.
And don't forget, check out our old friend Mickey's YouTube channel, Mickytolife. They've got awesome stuff, memes, music, wine tasting, travel vlogs.
Oh yeah, and a brand new Korea travel vlog just dropped. Food looks amazing. Go check it out.
Definitely. Go check it out.
Thanks for joining us on Sip and Talk, everyone. We'll catch you next time.